China's kind of come back with a vengeance. We've said that they are getting back into production. They're ramping things up to get back into production. The question was, would the West be buying the things that they're making? Right? So
Yeah.
that's the kind of the big unknown at the moment. What were the sorts of things that the analyst was concerned about? Was it just that big question, or was there more to it?
No, I guess so. In terms of the near term, right? So China went through its big crunch in Jan, Feb, March. We saw indicators showing that the demand was going to come back, and yeah, I mean one of the Chinese firms just sort of published their May calculation of demand, and that's actually up year over year. Where his concerns are, we're now in the worst. We're now seeing the worst of the data coming from the rest of the world. So the rest of the world went into lockdown in March and April, and so we're seeing sort of the worst of that data. Unlike China, there's not that sort of direct fixed asset investment that's they're going to start ordering steel next week in Canada, the United States, and Europe. It's going to be a slower process to get off the bottom, and I think we talked last week that what's going to happen is they're going to have to do more stimulus packages to get their economy regrowing. We think a lot of that stimulus is going to help things like the EV sector, but we are going to go through this valley where Chinese demand is going to be up year over year for the right through the rest of the year. But demand from the rest of the world is going to be down significantly, down like high single digits, and it's been down double digits through March, April. But again, I think we're through the worst of it now, so everything should be starting to move higher. But as I said, we won't get back to year-over-year increases from the rest of the world probably until year end at the earliest.
Okay, so there's been a bit of setback. I'm just again trying to understand the things that the analysts are concerned about. Obviously the Indonesian ore ban, we talked last week about Tesla shifting the shape and design of the battery in terms of non-nickel batteries, and was that in the conversation? Were those some of the factors quoted?
Oh yeah, that was there was the demand side was one aspect of it, and the second aspect was this ramp up in Indonesian nickel pig iron production. So that when you take Indonesia and China combined, it should double from 2018 through to 2025 and grow at a pretty healthy clip. You've got 3 or 4 very large scale projects that are continuing to add pretty substantial amounts of nickel production capacity. So it's that sort of better visibility about this pipeline of nickel pig iron projects delivering nickel into the market that it was the other sort of key piece of concern for that analyst. The thing, and I think I highlighted this on our discussion last week, is again, the problem is nickel demand is higher than the other metals, and analysts, he's better than most in terms of having realistic demand numbers. But even with a drop down, you have to compensate for that. The market will rebound in a pretty meaningful way after that. So you have to put some very high demand numbers when you come out of the rebound in future years. So that sort of the demand growth over that period, reflects kind of 300,000 to 400,000 tons from EVs plus 2 to 3% trend demand growth, and so that's a good 1 or 2 percentage points slower than what trend demand growth has been for the past 10 to 15 years. So and if you add that extra 1 or 2% in, then you get to deficits at the end of the year. So I'm glad I don't have his job and having to try and sort of guess what that 23, 24, 25 demand is. But that's really the two factors is Indonesian plus Chinese NPI plus overall demand growth. Where are those two lines going to cross or not cross as we move forward?
Well, I suppose the good news being an analyst, you get to change your mind every quarter, quite frankly, because new data comes in, right? But let's talk about something we've talked about a few months ago, which was the impact of the steel market on nickel. It kind of shows you, gives you some clues and some trends. Like I saw some data which came out, which said that China and Indonesia, which has been historically not a significant player in the market, it now represents 65% of global production for 2020. I mean, that's huge.
Oh yeah, no. Well, China plus Indonesia, maybe stainless steel would probably be close to that number, and I think by 2025, that's where you're looking at Indonesia on its own being close to 45% of global supply. So I've got a chart that I use in my nickel presentations talking about the fact that, NewCal, Philippines, Indonesia as a group control just over 50%, which is as much as OPEC controlled at its peak. And given, Mr. Friedland's nickel is the new gasoline sort of theme here, they're going to have a lot of power over the market. So, and so when you then factor in that, huge amount of growth coming from Indonesia, then, their share of global supply is going to increase dramatically, because literally Indonesia is the only place we're going to have supply growth. Most of the other production from most of the other regions globally has been shrinking over time, and we don't expect that trend to slow down dramatically, for the foreseeable future.